A chart has been circulating through crypto social media highlighting an exorbitant amount of cash sitting on the sidelines just waiting to rotate into risk-on assets like crypto and certainly specifically XRP. I mean, we're talking rocket fuel for XRP. But should we be confident that's actually going to happen? Well, history says the answer is yes, and I'll explain why. But I'll tell you at the outset, the implications for XRP holders are absolutely staggering. This coin has never been so well positioned in its entire history. So if indeed the market is going to rip to the upside, expect XRP to be either the top beneficiary or one of the top beneficiaries, $2.39 Bitcoin, a little over $110,000. So yeah, the market's looking green over the last 24 hours to whatever degree on the whole. But mostly just more chop, more sideways price action. Not going to be staying here for long, though. And of course, the stock market and crypto asset class do move in tandem. So if stocks are going to be trending higher for the foreseeable future, it makes sense to expect that crypto will follow, especially since it hasn't had a parabolic blow-off top. We have not had a euphoric alt season, which historically has marked the top for every freaking crypto cycle that has ever happened. I do not believe for a moment this will be the first one where that doesn't happen. Yes, we're going to see the euphoria. Markets do not end in fear, and the market has been in extreme, well, not, I was going to say extreme fear, but that's just a way of speaking. But the reason I hesitate is because it actually means something if you're looking at the Crypto Fear and Greed Index. There's a category called extreme fear. The market's just in a good old-fashioned fear at the moment, not extreme fear technically. But that's not the sentiment when you hit the peak of a market. It just isn't. When you hit the peak of a market, and you can see it in hindsight, the sentiment is euphoric and through the roof. And people don't realize, actually, that's the end. And so it doesn't make sense that this time would be different. So here's a post from Ryan Dietrich. He's a chief market strategist at Carson Group. And he wrote, "Don't tell your favorite bear, but November is the best month for stocks since 1950. It's the second best month the past 20 years. It's the best month the past decade, and third best in a post-election year. So, given that history rhymes with itself, do you think this is going to be bad or going to be good?" And this is just one of many interesting figures that Ryan Dietrich has shared recently, which I've enjoyed highlighting on my channel, just to continue to illustrate the point that although we don't know for sure what's going to happen in the future, you never do technically for sure, it's about probability of outcome. And based on historic precedent, it makes sense to believe that we are going to have a final burst for crypto, a final parabola, and euphoric alt season before the market peaks. Don't know for sure if that's going to happen, but I'm absolutely strongly betting on that side as opposed to us entering a bear market right now, even if we have a pullback first. Pullbacks happen all the time in bull markets. That's not. Now, here's a chart that was shared by somebody named Amy Nixon, and it's been seen 1 million times, but this is just one of like a ton of different posts from various influencers in the world of finance and crypto who have shared this. So if you're on X and you're following a bunch of people that talk crypto stuffs, you've probably seen this over the last couple days. And I want to talk about this. It's showing money market funds, the total value, and it's at $7.4 trillion, an all-time high. That's right, money market funds, $7.4 trillion now at an all-time high. So right now, that means you're talking $7.4 trillion. Again, with this being the highest level in history, just sitting there in money market funds, like, with that being the highest level in history, I mean, just think about what that means. Like, these are investors, institutions, corporations who have pulled capital out of risk assets and are sitting in ultra-safe short-term instruments like treasury bills and repurchase agreements, collecting around, 4 to 5% annual yield. Which is, and to be clear, like, compare that to what you get if you're invested in just like an ETF that tracks the S&P 500. On average, going back to like 1957, the average return is close to 11%. So these are individuals and entities, businesses, so on and so forth, that are willing to take just 4 to 5% yield instead of what averages out in the S&P to be close to 11% for the security of it. I mean, so in that sense, and given that you can pull it out at any time, it's basically, this is highly liquid, to be clear, what we're talking about. When you're talking about money market funds, this is highly liquid. It's basically cash parked on the sidelines waiting for a better opportunity. And also, another reason that it's appealing to invest in money market funds if you don't have sufficient appetite for risk-on assets, you're not going to lose your principal either. You just get a certain percentage, and for money market funds, that does vary from day to day. But just like right now, it's around 4% actually. So it varies a little bit, but it's not eating into your principal. So if you're concerned, you do this to hedge against tumultuous times. And different people have different risk tolerances. But this is a lot of highly liquid cash, effectively, that's just sitting on the sidelines right now. Now, historically, and this is why it matters to you, historically, when that much money piles up in money market funds, look, it doesn't just stay there forever. The buildup usually happens when the Federal Reserve holds rates high and investors get cautious. But once the Fed starts to cut rates, yields on those funds begin to fall. So instead of getting, about 4%, it could start falling. 3.75%, 3.5%, and just keep on falling down depending on how much, to what degree the rates are cut, to what degree the federal funds rate falls. And so when investors realize they're no longer earning 4 or 5% risk-free, they start looking elsewhere for returns. And that's when capital begins rotating out of money market funds and into risk-on assets like equities and, of course, ultimately crypto and XRP. And we've seen this exact story play out before. After the 2008 financial crisis, for example, money market fund balances fell by about 20% as the Fed slashed rates and confidence returned. And during that same window, the S&P 500 rallied about 65%. And Bitcoin, which of course was just emerging at the time in 2009, ultimately, when things started going up, it went on to gain hundreds of percentage points, in the following cycle, of course. It was monstrous. And of course, the same pattern showed up again in 2020, as money market assets dropped just 12%. Just 12%. The S&P 500 jumped around 35%, and Bitcoin soared more than 400% within a year. And so the takeaway is simple. When just a small fraction of the trillions sitting in cash moves back into risk-on assets, when that appetite for risk comes back, it has an outsized effect on prices. You don't need much, just to be clear, you don't need much of this $7.4 trillion sitting on your screen here in money market funds. You don't need a big percentage of that, to rotate, to have a massive bull run in crypto. And look, that happens because markets are priced at the margin. So only a small amount of new buying pressure is needed to reprice everything higher. So if even 5% of that $7.4 trillion, which would be roughly $370 billion, if that flows into stocks and ETFs and crypto over the next rotation, it's like pouring rocket fuel into a system that's already structurally thin on supply. So yes, stocks respond first, and crypto, of course, being the highest beta part of the risk spectrum, it reacts next. And that multiplies impact several times over at a minimum, like just massively. And again, I'm saying even if only 5% rotates, which is that's below historic norms. It doesn't have to be. So I mean, it depends. Like if you're talking great financial crisis, or it does 20%, like I said, or the pandemic era, 12%. Even if it's 5 or 6%, though, you get the idea, right? That's massive. And you know that the Fed is cutting now. So for XRP specifically, this matters because liquidity rotations don't happen in isolation. When broad risk appetite returns, it lifts the entire digital asset space, and XRP historically benefits late in that liquidity wave. It just does. That's just data, folks. That's not my opinion. That's the way that it's unfolded thus far. So the same forces that push investors from cash to equities, to crypto, it also fuels capital into networks with real-world utility, XRP, and established infrastructure, XRP. That's where XRP lives, my friends. So as we approach what could be the start of a Fed easing cycle like 2, I mean, it's already started, but it's expected that there's just going to be more rate cuts. The logic's pretty damn straightforward, frankly. Falling short-term yields will make sitting in money market funds less attractive. That cash will start seeking higher returns. Not rocket science, folks. It's rocket fuel, but not rocket science. And even, again, the mystery says it can set off another major bull run. That's one that you absolutely should expect to spill over into crypto, and XRP is positioned to be one of the biggest beneficiaries when that happens, if not the biggest out of the top 100 coins by market cap. It's coming, folks. And so there's a good reason that had rotated, and I hadn't talked about that yet, so I wanted to share it with you. Here's a post from somebody named James, and he shared this chart from Raoul Pal, the founder and CEO of Real Vision and global macro investor. He, of course, is the gentleman who made me aware of the importance of global M2 and how Bitcoin and thus the entire crypto asset class tracks it. Well, he's back with another straight up banger, my friends, as the youths would say. You got the price of Bitcoin here. That's the white line. And then in this, what would you call it? It's light green or teal line, whatever color that is. That's gold price with a 188-day lead. And so if you adjust for that, you can see that there's a high correlation. And this drives at a point that I actually have made several times over the last couple of weeks, which is that historically, gold runs up. I mean, now it's run up to a historic degree this year, no doubt. I mean, it ran up a new all-time high over $4,300 per ounce. So the degree, that's historic. That's a little bit different. But as far as gold running up and then Bitcoin following, no, that's not weird at all. That's historically normal. You should expect that. And what I've been highlighting recently is that gold has been running up. Gold's either peaked or it's going to peak sooner than later. That's what most analysts think, and I find that plausible because, I mean, look at this. Look at the freaking ramp up here. That's when you exit, folks. Like, I mean, I'm not saying I know where the peak is, but like when that start happening, that's freaking parabolic right there. Okay, it's the biggest run in decades on gold. All right. But what I've been highlighting again recently is that gold runs, Bitcoin follows, which means crypto follows, right? Including XRP, right? And so you can see the correlation here going back to 2023. So if this correlation continues, which would make sense, then it's off by about half a year. Think about that. It lags by, a little more than half a year. So imagine that would mean that 6 months out, Bitcoin's like through the freaking roof if this correlation continues. Now, that would also be interesting because Raoul Pal and Julian Biddle and TechDev and some others have been increasingly arguing that what's most probable is you're going to see a market peak, certainly for crypto, in Q1 or perhaps even Q2 of next year, 2026. And if this correlation continues with even just Bitcoin and gold, that would fall in line with that expectation. You'd be looking at Bitcoin getting up to that level like closer to April of 2026, if that's the case. And there are reasons that the market cycle has been lengthening. I've shared them on this channel. I'm not going to go through it again in this video. But there's a strong thesis from Raoul Pal, and I don't know for sure if it's right, but I find the argument highly compelling. And the guy's got a ridiculously high accuracy rating when it comes to markets. No one's perfect, but highly accurate. So the thesis is compelling, and this is just one more thing you can look and be like, well, if that thesis is correct, what do you think's going to play out here? Number go up, my friends. Number go up. Here's a post from Altcoin Gordon. It says, imagine being bearish when Bitcoin is going through an accumulation phase. Panic sellers now will be panic buyers in a few months. Yeah, probably. That's the side I'm betting on. I did not forget the timeline. I don't pretend to know when that's going to happen. But if the question is, are we entering a bear market now, or will the market move to the upside even if we see a pullback in the short term? I'm going with the latter. I do not believe we're entering a bull market. There's too many things where you'd have to say this time is different. I just don't buy it. That would be so far outside of historic norms. It wouldn't make sense with global M2. Wouldn't make sense with the business cycle not peaking. None of that would make any sense, because it's not just about time. It's about what factors causes there to be that 4-year rhythm. And if there's an adjustment in the metrics that cause that 4-year rhythm, then it makes sense that you can have an extension. And so now it's closer to a 5-year rhythm, according to Raoul Pal, for example. And again, like I said, I find it compelling. We'll see if it's right. But it'd just be bizarre to think that we're entering a bear market now. So I'm with Altcoin Gordon on this one. Here's a post from Crypto Wizard. This is the crypto total market cap excluding the top 10 coins by market cap. And this is the dominance percentage of that category. So it's the others chart dominance percentage. That's the name of the chart, others. And he says here, 6-year test. Each test led to a surge. Others' dominance kissed a 6+ year low. Altcoins are extremely undervalued. Will this mark the end of their downtrend? Patience pays. Well, folks, as I frequently point out, markets find bottoms. It's the same thing I said for XRP throughout 2024, especially when we were looking at the XRP BTC chart. Markets find bottoms. It doesn't mean it has to be an all-time low, but markets find bottoms from cycle to cycle. This is low enough where it would make sense to think, either we already hit it or we're pretty damn close. It won't go down to zero, okay? Altcoins are not going to fall to zero against Bitcoin. And again, this is a dominance percentage chart, but the concept is still true. Like, we're going way higher, folks. That's my conviction. If I'm wrong, fine, I'm wrong. Then I'll suck it up and we'll go through another several years and then the market rebounds anyway. But I don't think we're going to have to go through a bear market before that final euphoric blow off top. It just doesn't make sense. You got to look at macro factors, not just charts. You've got to consider macro factors. Here's a post from Chart Analyst Mustache. This is the crypto total market cap excluding Bitcoin and Ethereum, so altcoins. It says, am I the only one who is currently insanely bullish on altcoins? 6-year trend line holds like a boss. 2021 all-time high now acting as support. Everything is so obvious, you'll soon see why. Okay, I buy into that narrative. And if I'm wrong, I'm wrong. But this is the side that I'm on. This is what I think makes sense. And if I'm wrong, I don't have an ego, so I'll have no trouble being like, nailed that one. Because I will get stuff wrong from time to time, but I really strongly believe it makes sense to have conviction that, we're going higher first. I really believe that. Here's a post from Charting Guy on October 14th. He wrote, XRP is not bearish in the slightest. And I actually shared that post at the time, in October 14th. He reposted that this morning, though, and simply wrote, not even close. So he's just reiterating the concept. Just this morning, nothing's changed. Not bearish, going higher. Here's a post from Chart Nerd. He says, XRP is showing signs of a bullish reversal on the horizon. Channel support awaits below with higher lows on the weekly MACD and SRSI levels in oversold territory. $5 is the first move of many on the next impulse. I believe XRP will front run within the blue chips category. Yeah, so large caps, of course, is what he's referencing when he says that. And by the way, he believes that XRP is likely to peak closer to $27 this cycle. So when he says $5, he really does mean just the first impulse. He thinks this is going way, way, way freaking higher. Here's another one from Chart Nerd. He wrote, XRP, keep it simple. And you can see he's comparing where we are right now to what happened in 2017 into early 2018 when XRP went from, for that cycle, half a penny to $3.35. Just a massive move. And he's pointing out, guys, look, I mean, you can see what he's circling. He's circling for a reason. And he's articulated it in separate posts, so I know for sure this is what he's talking about. History's rhyming with itself, okay? The structure that played out in 2017, it's the same thing that's unfolding right now. Tons of analysts believe this. Here's a post from Cryptolica. He clearly believes that as well. He simply wrote, XRP one more leg, so he thinks we're going to have that massive burst. And that makes sense. Every single cycle, go back the last few cycles, we've had a major move, consolidation sideways, and then another major one to the upside for XRP, and then that's it. We haven't had the final one. Here's a post from Chart Analyst Steph is Crypto. He certainly buys into that as well. He says, XRP structure is mirroring the 2017 setup that preceded a 13,000% rally. Well, it makes sense to compare this. Like, why would this time be different? You were just going to have a euphoric blow off top with altcoins, and then XRP is just not going to participate. It's just done. Yeah, I don't think so, folks. Mania is mania, and XRP is so well positioned. It has been artificially suppressed for years, and now the market's correcting for that. Here's a post from Ether Nacional. He clearly believes this as well. He says, XRP, a different perspective. Q4 2017, after breaking the middle band of the channel, XRP peaked in a parabolic rise within a few months. Q4 2025, in the same channel structure, the price again touched the middle band, was rejected, and then began to accumulate. The chart shows an almost exact repetition of the technical position before the 2017 breakout. And so this makes sense. And I was talking about this structure before November of last year. I told you guys, even leading up to this, historically, this is the move. XRP rockets, it goes sideways, and then it has another one, whether it's half year later or whatever. Historically, it is closer to half a year, but if there's a lengthening cycle, it makes sense that XRP hasn't gone yet. But structurally, it's the same thing. And this is what I was talking about leading up to the burst of November of last year. And tons of reputable chart analysts who are correct about XRP rocketing this market cycle, they're all saying, yeah, that's basically what's playing out here. And here's another one from the same analyst, Ether Nation, who says, altcoin/alt season. And this is the total 3 chart. It's the crypto total market cap excluding Bitcoin and Ethereum, so altcoins. It says total 3 remains aligned with the long-term structure, holding above the 4.2-year uptrend and the 21 EMA. Despite volatility, the trend remains intact. Stick to the plan. So here's yet another analyst that believes, yeah, look at this too, not just yes, obviously XRP, but the whole market's going to go. The conditions are right for this to happen. And so that's why I spent some time also again on this post here showing money market funds. It's a record $7.4 trillion because we are entering an environment where it's absolutely expected. You're just going to see the Fed continue to cut further and further. And what do you think? Do you think that's good for risk on assets? The answer is yes. And again, you don't need much of these highly liquid money market funds to flow into risk on assets for it to be ridiculously meaningful. You get a multiplier effect when money flows into the risk on assets, especially crypto, because those markets are much less liquid and order books are thin, so it doesn't take much flowing in to get this crazy multiplier effect. And then it creates mania. Demand is demand, outstrips supply. That those price levels drives price up. I mean, it's just simple, basic supply and demand stuff. That's what we're in store for. There's not enough XRP for everybody, not at these prices anyway. I'm not a financial advisor. You should not buy or sell anything because of anything I say or write. That would be a very, very, very bad idea.